Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier, and thank you for stopping by. Sub-Saharan Africa, The Economist says, stopping a thief, the world should not recognize Congo's stolen election. When the Constitutional Court declared him the next president of the DR Congo, Tshisekedi toasted his victory with a glass of champagne. He was due to be inaugurated as The Economist went to press. Ramaphosa congratulated Tshisekedi, urged all stakeholders to accept the result and continue with a journey of consolidating peace, uniting the people of Congo and creating a better life for all. What a travesty! The election was really won by Martin Fayulu, and by a wide margin, won more than 60% of the vote. Tshisekedi came a distant second with 19% of the vote. Emmanuel Ramazani Shadari, the fellow was handpicked by Kabila with a paltry 18.5%. The Economist is saying, it is hard to exaggerate the scale and the flagrancy of the fraud. Before the vote, the Kabila regime used all its powers to nobble the opposition, barring popular candidates, banning rallies, firing on crowds, using state resources to promote the hapless Mr. Shadari. When that was not enough, because voters are thoroughly sick of their corrupt, incompetent rulers, the count was rigged. Declaring Mr. Shadari the winner would not have passed the laugh test. So Mr. Tshisekedi, the callow son of a revered opposition leader who died in 2017, was tapped instead. Many suspect a stitch-up. Saying at first the stolen election prompted a sharp response from the African Union. Before the Constitutional Court endorsed it, the AU called on Congo to hold off on declaring Tshisekedi the winner. The AU and many Western governments seem willing to turn a blind eye now. The Economist is saying there are costs to ignoring Congo's great election robbery. Calling Mr. Tshisekedi the winner fools no one. Democracy, they say, is beleaguered across the world. If even its supporters, such as Mr. Ramaphosa, do not speak up when an election is ostentatiously filched, autocrats everywhere are emboldened. And they're also talking about Zimbabwe under Mnangagwa is in turmoil. Far better to call a coup and a stolen election stolen. No one should recognize Tshisekedi's election. Africa will not be stable until Africans freely choose their leaders. So going back to Ramaphosa, the announced result is the equivalent of overturning Cyril Ramaphosa, who will surely win the election in 2019, and investing Mumusi Maimane as president. It was a clever ruse by the outgoing President Kabila, but it won't stand, I said. I wrote a piece on the 7th of Jan about why they delayed the election results, and I was quoting Stalin, who said it's not the people who count that vote, it's the people who count the votes. I also said then, this is a clear-cut case where the will of the people is being subverted and that it's egregious and outrageous. Moving on, this is from Wilson VornDick, a commander in the US Navy Reserve, writing in the National Interest via Ken Apollo. It is unclear whether China could handle the financial repercussions of a larger, more systemic default or debt forgiveness program across the African continent. Seeking relief, debtors to China would likely overwhelm existing mechanisms like international arbitration or China-backed forums such as the Export-Import Bank of China. Saying that, importantly, debt restructuring, recoupment, and in the more extreme case, seizure may not be viable, reasonable, or sustainable for Chinese interests or presence continent-wide. Such a dire economic scenario might push China to use its nascent military force to protect or even seize its interests. Looking back at the previous period of great power competition more than a century ago, leveraging military might to force repayment was commonplace. The US made multiple incursions into the Caribbean and South American nations, as did the Western powers in Africa and Asia. It is reasonable to assume that China would have little or no experience in any dire economic contagion across Africa. The one primary example, the takeover of Hambantota port, was an isolated incident during calmer times, before the financial uncertainty stoked by a slowing global economy, or the current US-China trade war. Moreover, the port takeover has now become a watershed moment in Chinese behavior that has attracted significant international scrutiny and ire. That's an interesting perspective. Airtel Africa got a $200 million investment from the Qatar Investment Authority. Over the weekend, I mentioned that Bharti Airtel is keen to fatten up its Africa business ahead of an IPO. That's why they're looking to snaffle up Telkom Kenya. The fundraise from the Qataris is estimated to dilute Airtel's stake in its Africa unit to 67.24% from roughly 71.6%. South African all shares up 2.64% this year. Dollar versus Rand, big rally in the Rand here. Egyptian pound, 17.67. Nigerian all share, minus 0.91% this year. Ghana Stock Exchange, minus 2.97% this year. Look at this. Spreads on Ethiopia's 2024 Eurobond have narrowed from more than 700 basis points over to less than 400 over since Abiy took office. Moving on to Kenya, the Nairobi all shares up eye-popping 6.31% so far this year. End of January, 28th of Jan, I wrote Reasons for Optimism, and I described the Nairobi Securities Exchange as bright-eyed and bushy-tailed. The NSE 20 is up 3.7% year to date. Have a look at my interview with Andrew Cowan, who's the MD and CEO of East African Breweries. East African Breweries has rallied 21.173% year to date. And this was after, a lot of that was after the release of the first half earnings results. That is linked on the website. East African Breweries has also borrowed 11.5 billion shillings from Standard Chartered and Stanbic Bank to pay off a similar sized loan taken from its London parent Diageo. M-Pesa for the third year has been voted Kenya's leading super brand ahead of the parent company, which is Safaricom, which was placed second. Safaricom share price data, its capitalization is $9.429 billion. It's trading on a PE ratio of 17.174. Half-year results, M-Pesa revenue surged 18.2% to 35.52 billion shillings. NIC Bank will merge with the country's biggest privately owned bank, CBA Group, the chairman of NIC announced on Thursday. James Ndegwa did not offer a timeline for the merger, but told journalists, "Today we announce our intention to merge NIC Group and CBA Group. The envisioned share exchange ratio will be based on a 47-53 relative valuation of NIC and CBA, and that clearly is attractive for NIC Bank shareholders, and that's why the share price has rallied more than 20% this morning." Have a look at this link, these comments from John Gachora. And then finally, let me leave you with a picture of the Florida 2000. This is from Surabaya, which was an iconic building here in Nairobi for many years. Once again, I appreciate you stopping by. Thank you.